Biden is talking about a windfall of war. He's flying the kite about the possibility, I suppose, of windfall taxes. You've lived through many administrations. Do you think that this windfall tax can take flight? Is there any real chance of windfall tax?
Well, I think it's a very highly charged political environment right now. Whether you're a Democrat or Republican, you're concerned about high energy prices, what happens during the winter, and obviously the industry is cyclical, and it's now a time when its profits are very strong. But we've seen this before, because then it's a cycle and they go down again. I think what you don't want to do, and what we do need, is people pulling together to address the production issues and to address what happens on December 5th, because you could have a larger crisis in the oil market, and you need people cooperating, not at war with each other.
December the 5th, new sanctions come in. I'm hearing anywhere between 2 million to 3 million barrels, all told with product and crude, will come off the market from Europe. You talk about a crisis. Translate that crisis into what happens in the market and prices. December the 5th, that oil comes off.
Well, I think the question is, how does Russia respond to it? I mean, you're talking about 1.3 million barrels of crude, and then, as you say, the product, that comes in February, and the product might be even more difficult than the crude, because refining is so tight around the world. But I think you have to ask the question, Vladimir Putin has used gas as a weapon. How would he use oil as a weapon? It may be in his interest to actually constrict supply and see prices go up.
Well, here's the rub, isn't it? The Americans are talking about a price cap between $40 to $60. Do the Russians just shut in and go, nyat? That's the risk, isn't it?
Well, this is, we're in new territory where you're basically putting price controls on one commodity from one country. It's never been done before, and it's the weight of it is going to fall on the shippers and the insurance people to manage it. I think that the administration thinks this will be indicative, and it won't be too different anyway from the discount price. But the question is Vladimir Putin going to allow the U.S. Treasury to set the price of his oil, given everything else? If you read his speech that he did just a week or so ago in Moscow, of all things, he quoted Milton Friedman talking about price controls on tomatoes and how you get a shortage of tomatoes. So, they've had a couple of months to prepare for this.
Do you expect Russia to shut off the taps and completely weaponize oil? Is that an under-talked about risk?
No, I don't think completely, but I think you could see a disruption of some supply. You don't have to take a lot off to create a panic in the market. So you're trying to manage something that's never happened before, and that involves so many different participants.
Let's say there is an escalation. We don't know just how, but you're using the word panic. Panic to me, I'm Bloomberg. I want to know what panic translates to in a price of barrel of oil.
Well, I'm not going to put a price on it, but I do think back, we really haven't had a scramble for oil since the 1970s, and we could have it today. You have, countries are very much at the edge, and I think you have to be conscious of that, and you have to send messages about confidence and not have a kind of conflictual internal message going on.
But we have a conflict between Saudi Arabia and the United States of America. I will talk to Amos Hochstein later on. It's frosty, to say the least. This is energy sovereignty. That's the word you used when you sat in the seat. Translate energy sovereignty, first of all, to the Saudis.
Well, I think this is, it's just interesting how you get a new buzzword, and it basically take the global supply chains, whether it's chips or anything else, countries saying we have to be more self-sufficient. And in oil, too, and natural gas now, it's less reliant on just efficiency in the market, but building security into it and investing in it. And clearly it's a boost for renewable energy as part of that. So I think that what's happened over the last year is really made people rethink about the energy transition, recognize that there has been underinvestment in the conventional resources that you need, and that the transition is happening, but it's not going to happen overnight.
But then finance has been reluctant to invest, hesitant to invest, because of the dislocation in policy from government. There's no clear policy, let's say, from this current administration, which is no drilling on federal land, then produce more, then talk about windfall taxes. There's a lack of clarity.
You've summarized it very well. It's like step up production now, but we want to stop later.
How would you define the current policy?
Well, I think that this has been a shock for an administration that came in only focused on climate, and it's had to really deal with very severe energy problems that they didn't expect, and they have to work with an industry that they don't really know very well.
Okay, we've run out of time. I didn't get to whether it was folly to cut by 2 million barrels from OPEC at the last meeting.
Well, it wasn't really 2 million,
Was it folly or not? Folly or not?
I think that it depends on your perspective.
We didn't get Yergin on the final call on the 2 million barrels, but it was a paper cut. Everybody's saying that.